Hey everyone, welcome back to Corporate Decoder, the place where we decode all those confusing corporate documents. Today we're diving into Lamar Advertising Company's recent filings, so let's see if the numbers are as bright as those billboards they sell. This document is essentially a heads up for Lamar Advertising Company's annual meeting happening in May. It tells stockholders what's on the agenda and how they can vote. Think of it as a user manual for your voting rights. First up, stockholders will be voting on who gets to sit on the board of directors. These are the folks steering the ship for the next year. There are 10 director positions up for grabs, each with a span 1 year's term. Next, they'll be asked to approve KPMG LLP as the company's official scorekeeper, the independent accounting firm. Basically, they make sure the numbers are legit. Only stockholders who own shares as of March 17th get a say in these decisions. If you bought shares after that date, you'll have to wait until next year to vote. So if you're a stockholder, keep an eye out for those proxy materials and make sure your voice is heard. This whole thing is signed off by James R. McIlwain, the secretary, as of April 4th. Scroll, do you have contents? Scroll to your right. Now let's jump into the proxy statement itself, which has a whole table of contents letting you know exactly what's inside, including general information, share ownership, executive compensation, and other items. The company has different types of stocks. Class A, Class B, and Series R preferred. Class A gets 1 vote per share, Class B gets 10 votes, and Series R preferred also gets 1 vote. On March 17th, there were about 88 million Class A shares, 14 million Class B shares, and a little over 105 17th, there were about 88 million Class A shares, 14 million Class B shares, and a little over 5,700 Series R preferred shares. This table shows who owns a big chunk of the company. A few directors, officers, and some major stockholders own a lot of shares. For example, Kevin P. Riley Jr. owns a bunch of Class B shares. But also important investment firms like the Vanguard Group and BlackRock own millions of Class A shares. All in all, it shows who are the decision makers and who profits the most. This part confirms that all the bigwigs, directors, executive officers, and anyone owning more than 10% of the company's stock filed the right paperwork with the SEC about their ownership. Looks like everyone is following the rules. Here's a quick rundown of the executive team. Kevin P. Riley Jr. is the executive chairman. Sean E. Riley is the CEO and president, and J.L. Johnson is the executive vice president, chief financial officer, and treasurer. This section lays out the background and qualifications of everyone nominated to be on the board of directors. It talks about their experience, other companies they've worked for, and what makes them a good fit for Lamar. It's like a who's who of the company's leadership. Kevin P. Riley Jr., Sean E. Riley, Anna Riley, and Wendell Riley are all related, which is important to know. The first 3 are nominated to be on the board. The company determined that several board members, including Messrs. Kerner, Loeb, Mumblow, and Reifenheiser and Mischas, Thompson and Fletcher are independent directors, which is good because it prevents a conflict of interest. Here's where things get a bit cozy. Rav Broadband is a company mostly owned by the Riley family. Lamar uses Riview's subsidiary Ettle for some services and also contracts Ettle to provide advertising services for almost $300,000. Ross L. Riley, son of Kevin P. Riley Jr., is an employee with a compensation of around $590,000 plus benefits. The main goal is to keep and reward the executives who help the company succeed long term. They try to pay competitively compared to other media companies, and they link a good portion of the executives' pay to how well the company performs. This section is the company's explanation of how it decides to pay its top executives. The key pieces of the compensation package are base salaries, performance-based cash bonuses, and equity awards. The amount each executive is getting is tied to company performance. They can also participate in a 401k retirement plan and health benefits. The base salaries for Sean E. Riley and J.L. Johnson were increased, while Kevin P. Riley Jr.'s salary stayed the same. It seems Sean got a raise from $700,000 to $900,000, and Jay went from $600,000 to $700,000. The executive bonuses are based on performance goals like revenue and profit growth. The pro forma net revenue growth resulted in attainment of 200% of each such. Named executive officers target cash incentive bonus for fiscal 2024 based on revenue and pro forma EBITDA growth resulted in attainment of 75% of each such named executive officers target cash incentive bonus for fiscal 2024 based on EBITDA. The Compensation Committee can award compensation to executive officers even if it's not fully tax deductible under Section 16.2 NEPT of the Internal Revenue Code. This section just means that the company might pay executives more than what the IRS considers fully deductible, which is something a lot of companies do. If the company has to restate its financial results due to some kind of mistake, they can claw back some of the incentive-based compensation paid to executives. This can be from current and former executives. Here's a summary of what the top executives made. Kevin P. Riley Jr., Sean E. Riley, and J.L. Johnson. In the year, Sean E. Riley made a total of around $9.3 million. This section looks at how much the executives made when their stock vested, meaning when they fully gained ownership of the shares. The value realized on vesting for Sean E. Riley was almost $2.5 million. The company also has deferred compensation plan, which shows how much the executives have in their accounts, including contributions and earnings over time. Kevin P. Riley Jr. has almost $7.8 million in the account, and Sean E. Riley has around $2.9 million. The pay ratio is the difference between what the CEO makes and what the average employee makes. For Lamar, the CEO made 140 makes for Lamar, the median employee. This table breaks down what the non-employee directors are paid. They get cash fees, stock awards, and other compensation. Stephen P. Mumblow made a total of about $183,000 in 2024. Here, the document dives deep into how executive pay relates to company performance. It compares what the CEO and other top execs were actually paid versus how the company did in terms of stock returns, net income, and a measure the company calls adjusted EBITDA. The relationship between companies' TSR, net income, and adjusted EBITDA results can be seen in these charts, which indicate that companies' TSR over this 5-year period tracks the same general trend as the peer group TSR over the same period. This part shows how many shares are available to be issued under the company's compensation plans. There are over 750,000 securities to be issued upon exercise of outstanding options. This is a statement from the Audit Committee, a group responsible for overseeing the company's finances. They reviewed the financial statements with management and the independent auditor, KPMG, and recommended that the board include the audited financial statements in its annual report. Here's the breakdown of what the company paid its independent auditor, KPMG. Audit fees were around $2.3 million in 2024. The Audit Committee has procedures for approving all audit and HISPAN, NOD-TOC-SPAN services performed by the independent auditor. Scrolled text A 8999487 additional interventional. Scroll. Finally, the report shares other information like the insider trading policy, a way for stockholders to communicate with the board, and the deadline for stockholders to submit proposals for the next annual meeting. The board is seeking a vote to confirm the auditing firm. This section also explains that the proxy votes are being solicited by the board, which means that the board members want you to vote in their favor. The company doesn't let employees or directors use inside information for personal gain. You can't buy or sell stock based on information that isn't available to the public. Stockholders can contact the board with any issues that they might have, which must be sent to the chair of the audit committee, which is a good thing because it means there is transparency and the possibility for change. So what's the story? Lamar is doing pretty well, following the rules with their SEC filings, making some reasonable adjustments for their executives, and just generally acting like a public company. Lamar seems solid. The company is making profits and is trying to do right by their executives and encouraging shareholder communications. If you're a shareholder, it looks like things are moving in a reasonable direction. That is, of course, if you are happy with the executive pay structure. Thanks for watching. If you found this breakdown useful, please like, comment, and subscribe. We'll keep decoding corporate filings so you don't have to.